What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Amit, and is it Menipaz? Is that how you pronounce it?
Menipaz.
Menipaz, yes, awesome. Phonics for the win. And I've got some great news for you, Amit. I'm glad to have you here, but today we are joined by my very, very, very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, all that kind of stuff. And you might ask yourself, why on earth would I do such a thing? Well, if you've ever heard of an off-market deal, sometimes they're called private, sometimes they're called 506B syndications. Well, the SEC requires that you have documentation, it's easy for me to say today, of your prior substantive relationship. And that means if you don't have some sort of proof that you knew the people who you work with, their appetite for risk, their level of sophistication and whatnot, then they will get ants in their pants and they'll shut you down. So it's very important that we do that. And the benefit for you of watching these episodes is you'll learn how to effectively communicate on the subject of commercial real estate, and you'll know how my guest fits into these deals. But before we get too excited about business, Amit, do you want to say a thing or two about your business?
About my business.
Oh, sorry, about
Sure.
yourself. Sorry, yeah. I'm thinking
Okay.
on too many tracks at the same time. You caught me.
So yeah, actually, I'll start with my name. Amit Menipaz is actually an Israeli name. My mom named me a friend more precious than gold. Amit is a friend, and Menipaz is more precious than gold. I've tried to live up to that all my life. I spent the past 25 years in high tech, working to build platforms for communities and helping people, as many as I can. A decade and a half at eBay, and more recently at a startup that was doing similar things for farmers to reward them for sequestering carbon by getting them carbon credits and premiums for their crops.
I love that answer. So it's more than just like a chicken, a beef, a meat. It's all the
There
same
you go.
thing, right? There you go. But that's great stuff. It's a silly
It's
joke.
also a friend. Okay.
Exactly. But let's get started. The first segment is on motivations. Before I do that, I got to say, but wait, check your eight. Amit, you're a technically inclined sort of person. I don't know if you can look through the camera on your device and down there, but the user's device might have this hideous subscribe button, and they might want to do something. It's really bad. It's embarrassing. People see it. Okay, it's a stupid joke.
Hit it,
Anyway,
hit it, get it out of the way, hit it.
exactly. But the five distinct motivations. I've spoken to all sorts of different syndicators, investors, and whatnot, and all of us have our own unique why for why we do these things. It's important for business partners to know what that motivation is because these deals take months to close and then years to actually go full cycle. So it's really important to know what's going to make somebody stick around. And I found that even though there are all those unique whys, I find they fit really neatly into these five different categories. So let's go through them. The first one is preservation of purchasing power. What on earth is that? Well, some people already have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. And if you're in that kind of situation, it might not make sense to make another acquisition. Like, why would you do it? Well, there's a couple reasons. One, is if inflation rears its ugly head, then it will eat away from the purchasing power of your cash flow. So it's time to get another asset and give that a little bit of a boost. But the other time where you'd be inclined to make a new acquisition when you're in this situation is when there's distress. So you can buy at a steep discount, like when there's an asset crash or something like that. But that's not really where I am in my arc. Where I am, because of my tech background, one of the nasty things about being in tech is you're a high wage earner, high salary earner, which means you pay more tax than anybody. The way that became particularly obvious for me is I was building all the IT and web funnels and all of the things to process transactions online for my old boss And from 2021, that's when I opened my CRM agency. But in 2014, my old boss was doing 10 single family house transactions every single month. And his tax burden is way lower than people who generally earn high salaries. So I was like, well, what am I doing paying all this money in tax when the idea is to actually get ahead? So I figured, how can I pivot to where I'm getting rewarded in the form of deployed capital, AKA equity, instead of just plain old dollars and cents in salary and wage and paying it all to the government. So that's what I'm up to. That's a little too subtle for some people. Some people, especially youngsters, they want to take control of their schedule. That might mean hustling like crazy for now and then retiring early, but it might mean they want to work fewer months per year or fewer weeks per month. And that is why they're going for this business instead of a standard W-2. And that's perfectly fine, but it's definitely not everybody. For example, the next group of people, they are so ambitious. They want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to hustle into their 90s, which is fantastic for any team that you've got. You want people who are going to stick around and keep at it instead of people that are just fly by night. And that's really fantastic. Another group that's going to stick around for the entire time, they're not necessarily concerned about their great grandchildren. They have, however, picked, maybe it's a sector of society, or maybe it's animals, maybe it's the environment. Amit, you mentioned carbon capture. But regardless of what it is, if you want to make a really big impact, there's a financial component to it. And that's why some people are making the commercial acquisitions that they're up to. So Amit, of those 5 different motivations, what combination of those would you say describes you best?
I think the last one definitely resonates. I always thought paying taxes was a sign that I was being successful. But the real motivation I had for making the switch was buying time. I just wanted to hire myself and buy time so that I can work as much as I want to, but spend way more time with my family. I had a very successful career, but the career was, 80, 100-hour weeks, lots of travel all around the world. Don't regret a minute of it, but I don't want to waste any more minutes away from people I care about. So between that and just helping people, which is something that's always been part of my career, even in corporate life, I built and taught coaching and mentoring, internally. It's always been something I want to do. I found that now that I've discovered this new world of passive income and real estate, I think everybody should know about it. And so I'm trying to spread the word as much as possible.
I love that answer. It's absolutely fantastic, and I think that too many people are a little bit coy to admit. It's like, hey, what's all this even about if we aren't spending enough time with the people who were responsible for turning into great people and showing them how much we care. So it's a fantastic answer. I love it, but. Real estate is a business, and all businesses have problems and risks. And if you've ever been involved in a 506B syndication, one thing that the securities attorney in the mix, who really should have been there, if there wasn't a securities attorney involved, that's a huge problem in whatever your investment is. But they should have insisted that everybody who's involved fills out this financial questionnaire with all sorts of invasive questions. So you have a really crystal clear idea of what your net worth is, things like that. But one question on that questionnaire, I noticed it didn't give me what I'd call actionable information, and it was the tolerance for risk assessment question. So I've developed my own fill in the blanks question to serve that a little bit better. And it is, there are many popular investment asset classes, but I think blank is too risky. So Amit, it can be inside real estate, it can be outside real estate. What's too risky for you?
So 3 answers: lottery, casinos, and anything I can't understand. I don't mind risk as long as I can understand it, quantify it, and think about ways to manage it.
I absolutely love that answer. Yeah, absolutely. There are so many things out there that people just jump in because they're fear of missing out or whatever else. But you're talking about understanding it. So if you're going to understand it, you have to know the metrics that are involved in this, and all of the different metrics They tend to be there for some sort of reason. It's better to understand them than not understand them. But at the same time, there are some that really jump out, and people use it as their first criteria to see if they're interested or not. So my next question is, what metrics do you depend on most? You can list off a few, but for the people in the audience that are listening instead of watching, I'll list them off. So there's cash on cash, there's IRR, cost per door, NOI, going in cap rate, loan interest, so the rate of the loan, the average income of the area, the amortization period of the loan, the market versus the in-place rents difference, population growth in the area where the property is located, the sponsor record, which has to do with how many deals have gone full cycle, and then the waterfall or the split. You're more than welcome to mention a different one if you want, but what are the top ones that tell you it's time to continue underwriting the deal or pursuing that deal?
Well, so they all play a role at different parts of the analysis, but to me, it starts with cash on cash.
Mm-hmm.
If you have positive cash flow, there's a lot of ways that you can make money. Just add time and cash on cash positive, lots of ways you can make money. So if it passes that threshold, then I look at the rest. I start looking at the NOI, which brings in to the income and cost sides. And it's kind of a little backwards because I probably have picked a market beforehand, but if I haven't and it's come to me, then I look at, the market research around population growth and see if this is a market I want to be in. I don't do a deal without believing not just the sponsor record, but the sponsor themselves. I make it a point to meet them, talk to them, see if our values align, understand their why. And if it fits, then there's an opportunity to work together.
I love it. I love it. And I can just gobble that up like a subscribe sandwich. The thing always kills me right there. It's very subtle, but it tells me that it's time to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And the reason I go through all 6 sides in every episode is it's very important for you to learn how to effectively communicate on the subject of a commercial real estate deal, because your future in this industry is going to depend on it. So in every episode, I go through all 6 sides, explaining each one. That way you're crystal clear how my guest fits into these deals. And if you want your own copy of the Dan Does Deals Commercial Core Competency Cube, you can go to dandoesdeals.com and print it out for free. And like a complete dummy, I didn't even ask for your contact information, which is the cardinal sin of marketing. You never give away your freebie without asking for some sort of contact information. But I want you to print this out. I want you to practice using the roles so that you can make this happen and make commercial real estate work for you. So let's get started. Repositioners are acquisitions people, so they're doing a bunch of paperwork and they're looking at a whole whack of different properties to figure out which one are they actually going to buy. Why are they called repositioners? Well, it's because they're trying to figure out how to change the business so it makes more money. But how can you know if it's going to help it make more money unless you know if it's already making money? And you need to do the math. It's called underwriting. You need to figure out, is this broker or seller even telling the truth about how much money that this property is making? Because it's pretty frequent that they fudge some numbers, maybe add a few months to the year. There are lots of different tricks they can do, and the repositioner needs to see through that. Now, one of the most unintuitive parts of being a repositioner is you're going to need a vast network of financiers, which is, of course, people who deal only with paper and money, so they're not doing any asset management or anything like that. And the reason why repositioners have to have a vast financier network is because if they can secure a more advantageous loan, that goes straight to the bottom line of, in other words, the profitability of the building. So that's why they have to know a lot of different financiers. But of course, that's a little bit unintuitive, as I said. The next spot the right repositioner is going to look is create more efficient operations, stopping those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rents and mowing lawns. As a matter of fact, Once you get to about 100 units or more, it's pretty frequent for syndicators to outsource the property management to a third party. So asset management is what GP teams generally are involved in. And my contributions to a GP team, they're mostly in the automation of any processes through web applications based on my history and my CRM agency. The other one too is you need to realize that in these buildings, vacancy is the enemy. It is the deal killer. And if the third party property management can't fill some units, somebody on the GP team is going to have some serious marketing chops. And so that's where I can come in. But of course, operations, there's only so much you can do as a repositioner to make it more profitable. So the next place they look is to get a contractor team involved to do a value add, to upgrade those units. The idea being that if it's a nicer unit, then the next resident would be more than happy to pay more in rent than the previous one. So that makes a more profitable property. But you got to be careful with contractors. You can spend endless amounts of money on them. You could gold plate the toilets, but you're never going to make any money from doing it. So if you're like me, I don't know if you know this about me, but I'm from the internet. That means I need locals. I need boots on the ground who can check out the property on a moment's notice. Me personally, that's not going to be me. I'd still be stuck at an airport in an hour or two, and these guys should be showing up in that amount of time. So I definitely need those guys, but their job is to make sure that the contractors are keeping the schedule. They're not using subgrade parts and materials, and that things are actually getting done in a timely manner, and also making sure the operations team, they're not sloughing photos or pretending that that everything's well and good when there are bigger problems. But once those boxes are checked and the repositioner has a property in mind, let's say maybe the repositioner's you, maybe you're an engineer or a physician or an attorney, something like that, and you got this idea in your head that you and your pals will put in like 100K each or something, take over the local commercial real estate building. Maybe it's an apartment complex. So you, as a repositioner, you go to the financiers and say, hey, I got this great property. Let's say it's 350 units and it's tens of millions of dollars. Do you guys have, I don't know, tens of millions of dollars you want to lend us? Well, the financier is going to have one burning question that has been on the forefront of my mind. I mentioned it in great detail in Real Estate is a Scam, but the financier is going to say, who's your sponsor? Who's your KP? And what's that all about? Teams are not eligible for a commercial loan unless somebody in the fold already owns a similar asset. So your plan to take over the 350 unit hypothetical property, it's going to be thrown away by the financiers because somebody in the fold has to already own a 350 unit apartment complex for you to be approved. On top of that, between all of these different GPs, you need to have a balance sheet of at least the amount of the loan, and you need to put together a certain amount of liquidity. But if you have all those pieces, you got yourself a commercial real estate deal. So Amit, as far as these different boxes, like every repositioner has to have some financier relationships. Which boxes do you tend to check and you expect to check in your next deal?
So I typically am in either the reposition or the financier boxes, depending on the teams and what they need and how I can contribute. I'm not in the asset management part, and I hope that you'll invite me back in somewhere between 5 or 6 years, based on my business plan, to talk about KP.
I love that. I love that. Yeah, it's definitely the play is to get that point. But let's get to the buy box then. So when syndicators are talking to each other, when investors are talking to each other, and we say, hey, what's your buy box? What's your ideal property? We're really asking about three main things. The first one's geography. Where is it? Okay, which state, which county, possibly even which neighborhood? It's going to matter. The second one is size. And most of the guests that I have here on this show are in multifamily, which is apartment complex investment, but all of the different types of commercial real estate, the size is going to matter. In multifamily, we judge size based on unit count. And the reason why it's important is because the type of team that would be eager to take over a 10 unit apartment complex will look completely different from one that is taking over 150, 350 unit apartment complexes. So that size definitely matters. Of course, the other forms of commercial real estate, many of them go off of square footage, but that size will still be important. But the third one, I call it desirability. A lot of people call it class, and I don't like the term class because at the end of the day, it's two completely independent things. So the first part of class or desirability is the condition of the building, and then the other one is the area that it's located in. When you're talking about condition, we're talking about how old is the building, how beat up is the building, and then as far as like luxuries and amenities, is it pretty bare bones, no frills, or is it full of places to exercise, do laundry, really wonderful place to be. So that's the condition. When you're talking about the area, we're specifically talking about what's the crime rate like where that property is located. What are the school districts like where that property is located? And then of course, when the old saying comes out of location, 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 what they really mean is traffic, traffic, traffic. If more people go by a certain property on every single day, then that place is going to be more desirable and therefore worth more. But the area and the condition, both of those versions of desirability, they're ranked with the same way as in grade school, where you got A plus at the top, and then A, and then A minus, and then B plus, and so on. So Amit, as far as you and your organization goes, and if you're dependent on sponsors, I understand that you're going to be more or less agnostic and dependent on the sponsors themselves. But what's easier to say yes to from those three perspectives?
So, top of mind right now is, in terms of market, Tulsa, Oklahoma, Vegas, and San Antonio.
Mm-hmm.
In terms of properties, B and C properties, what we especially like is when it's like a B property in an A neighborhood or a C property in a B neighborhood. That's our favorite for value add. And we're typically looking for cap rates between 6 and 12%, cash on cash of at least 9%, and we always work towards a DSCR of like 1.3, 1.4.
All right, beautiful. I love that. That's a great detailed answer. And that brings us to people then. My favorite thing about commercial real estate is because you've got these different roles. It's a diverse skill set that you have when you get involved in these different parts, and people tend to specialize. But it really means that everybody is really eager to give referrals, build new teams, but at the same time, because of our unique skill sets, we're better off helping some people more than others. Me personally, because of my tech background, specifically with e-commerce transactions, the people I can help more than anybody else, they're the sponsors and KPs, because they've already got the real estate foundation put together where a person like me can make a disproportionately large difference. When you're first getting started, though, as a repositioner, though, you need grunts who will put in 80, 120 hours a week. And of course, locals that fit that description, I'm always eager to get to know them because they're definitely going places. And after all, I'm from the internet, so my business depends on them. But Amit, if you have any 506B deals going on, don't mention them specifically because the SEC will get ants in its pants. But you can go ahead and mention financiers if that's who you're looking for. But who on the die might be in the camera and you're best suited to help them?
So right now I'll say I've got one 506C in Tulsa, Oklahoma. That's a great deal for anyone looking to LP on a deal. And in terms of sponsors, any sponsors interested in the three markets I mentioned, San Antonio, Texas, Vegas, Nevada, or Tulsa, Oklahoma, we'd love to talk to you.
Beautiful. I love it. And then as far as how to reach out, I'm fortunate to have this distinct last name. It makes me super duper easy to find, especially on LinkedIn, which is the social media platform that I spend most of my time on. But if you have your phone handy and you scan this QR code right here, that brings you to the FAQs page of 506BME, which is the platform where I offer the service of documenting your substantive relations with your investors. And I take care of the IT. So if you drop your laptop, into the bathtub, you still have your documentation for the SEC proving that you knew your contacts, level of sophistication, appetite for risk, core competencies they want to contribute, and all that kind of fun stuff. But Amit, if people want to reach out to you, email, website, social media platform, how should they do so?
So the easiest one to remember, I think, the venture that I've set up about this is called Second Life Capital, because I'm trying to help everybody set up their second life. So it's Amit at Second Life. It's a 2ndlife.com.
All right, beautiful. I love it. And that brings us to the last part of this show. It's actually not for you, Amit. It's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and migraine-like symptoms, I'm confident it's due to the hideous subscribe button that's right there that you can get rid of for free. And of course, I'm biased. I like it when people click it, because if enough people do, then YouTube will actually start paying for these videos instead of me. And I think that would be amazing. And as far as the trade-off to you, it just means that my videos may show up on your list of suggestions, but you can go ahead and ignore those suggestions. I just really appreciate the fact that you spent this time with me. Just like Amit, I appreciate you joining me today. This has been great.
And Dan, I appreciate you. Slick format. Loved it. That was a lot of fun. Thank you.
All right, awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.